Hi, welcome back to the Marketplace. Government will engage high-powered officials of GoldFields to ensure smooth takeover of the Damang Mine in the western region. This is what we are picking up from persons with knowledge of the planned takeover of the mine. Here's more in this report.
Joy Business understands that this meeting that government will be holding with officials of GoldFields will involve some senior officials, or call them top-level executives, from the group head office in South Africa. Information that Joy Business is picking up, at least for now, suggests that government could grant the request for GoldFields for more time before they finally hand over all their assets on the mine to the state. This is because government want to avoid any gaps that may come up if GoldFields should totally pack out. Sources say there has been fresh communication from government to GoldFields to keep their machines running on the Damang Mine for now. The workers have also been told to still keep working on the mine. The Minister for Lands and Natural Resources, Emmanuel Amakufi, in an engagement last week announced that government will take over as the new owners of the Damang Mine. However, the outcome of this high-powered meeting today, April 22, 2025, could change things in terms of whether GoldFields could be given at most a year in terms of still managing the mine before government finally takes over. Well, for now, fingers crossed.
Meanwhile, ranking member on Parliament's Committee on the Economy and Development, Kojo Nkrumah, is warning that government's planned takeover of some mines and other policies towards the sector could cripple the economy. He has been speaking to Joy Business's George Affair on the sidelines of the IMF World Bank meetings in Washington, D.C.
There are a number of signals that the government is sending to what has been the fastest growing sector of the economy that they inherited, that is the gold mining sector, which signals do not give investors comfort. And we've outlined them in the statement that we've put out last night. That statement essentially points to about 6 or 7 specific things that the government is doing, which we fear will send a wrong signal to investors in general and in particular within the gold sector. But again, we make the point that the government has time and opportunity. They shouldn't get carried away with the sentiments to nationalize or to expropriate, because in the end, economic history has showed us that you never win when you do that. They should rather pull back and encourage private sector to feel more comfortable to invest, particularly in the mining sector. And when private sector does those investments and manages it efficiently, the sector will grow a lot more than can even happen if government expropriates that sector.
Not happy with their plan to indigenize that space, with government playing a lead role?
The history of economic development all over the world has shown us that countries that try to expropriate or national, particularly when it comes to natural resources, don't end up very well. And that is why we think that the government should adopt a more private sector-led approach instead of government-led approach. The government should adopt a lot more liberal approach and use its bargaining power to leverage and get the best for Ghana, but not necessarily to seek to nationalize or expropriate.
We end up having our fingers being bent by this portion of government saying that we want to play a lead role and ensure that Ghanaians take a commanding lead in the sector. And a typical example is what has happened to GoldFields.
The history of even the gold mining industry in Ghana and the times when the government of Ghana, I'm not talking about Ghanaian private sector, but the Ghana government itself directly got involved, has not been one that's been very exciting. And we think that instead of government seeking to expropriate or nationalize, government should pull back and rather draw in the private sector a lot more, offer the necessary fiscal incentives. Right now, it's like we are fiscally punishing, even the private sector that is operating. Government should offer a lot more fiscal incentives to the private sector. Government should give the private sector comfort that my investments are safe. When my leases are due for renewal, they will be renewed.
There were even concerns about not allowing foreigners to participate in the small-scale mining space in terms of buying and selling. You also think that that's not a good approach?
One of the worries we have raised is how the new act appears to have retrospective effect, that people who already have accrued rights in valid licenses now have all of those rights quashed. The kind of investments that they may have made in setting up businesses to operate now all go under the water because a new law has been passed that makes nonsense of all of their investments. And we are worried that this doesn't send the right signals to international investors in particular. We want investors, both international and local, to be comfortable and confident to invest their billions in the Ghanaian economy. That's what the economy needs. That's what the government needs. And we are worried that the signals that are being sent now go contrary to that. Thank you so much.
All right, we'll still stay in Washington, D.C. because the audit of the 2024 government expenditure and status of structural reforms are expected to dominate Ghana's engagement at the IMF World Bank meetings. Finance Minister Dr. Kassila Tuforson is leading government's delegation. Georgia Face there for us.
Well, for Ghana, it's a follow-up from what transpired during the fourth review. Yes, Ghana secured a staff-level agreement, but there are some critical things that Ghana needs to work on. Key among them is the arrears for last year and getting some clarity on it. Therefore, the Finance Minister, Dr. Tuforson, will indeed be following up on these discussions to try and convince the IMF that Ghana is committed to those reforms to help secure that $360 million from the IMF. But for those in the business community, investors and donor partners, it is not just about the money coming from the IMF, but also to show that Ghana is committed to these reforms that will go along with to stabilize the economy and also getting the required funding to support the growth of their country. For the Finance Minister, he believes that this will be his first meeting with the IMF, talk about the meeting with the Managing Director of the fund, and also meeting some critical actors, including the Paris Club members and also other development partners. From the IMF building in Washington, D.C., this is George Jaffe reporting for Joy Business.
Meanwhile, the managing director of the IMF, Kristalina Georgieva, is warning that the current global trade war could hit developing countries like Ghana in the form of cuts in donor funding and inflation rate spikes. Georgieva spoke at the formal launch of the IMF World Bank Spring meetings.
Ensuring that there can be cooperation in a multipolar world. In trade policy, the goal must be to secure a settlement among the largest players that preserve openness and deliver, very important, deliver a more leveled playing field. To restart a global trend towards lower tariff rates while also reducing non-tariff barriers and distortions. We need a more resilient world economy, not a drift to division. And to facilitate the transition, policies must allow private economic agents time to adjust and deliver. Critically, resilience requires that attention be paid to policies to cushion the blows on those who lose out. Distributional policies form a fundamental bridge between good economics and good politics. Well, to sum it up, we have the spring meetings coming, and I expect that as we gather our 191 members, it would provide a vital forum for dialogue at a vital time. All countries, large and small alike, can and should play their part to strengthen the global economy in an era of more frequent and severe shocks.
And time for action right now. Join us from the U.S. Associate Professor of Finance at the Andrews University, Professor Williams Wipra. Good afternoon to you from Ghana. I just want to show our audience a press briefing underway right now in Washington, D.C. There is a question and answer session right now, but the IMF pointing out that the Trump tariff, the U.S. could be worse affected by the imposition of the Trump tariffs. We are monitoring that press conference. Will subsequently report on the outcome. But you have been listening to the IMF boss talk about the impact of a global trade war. Earlier, we also spoke about the fact that government was going to engage on structural reforms and the audit of the 2024 expenditure. How do you assess the current status of Ghana's structural reforms, and what progress has been made, do you think, by the government in that regard since the last engagement with the World Bank?
Good afternoon to you, Daryl, and good afternoon to your viewers. So indeed, after Ghana re-entering in this IMF program, we've seen that we have worked very hard, especially in the area of digital tax administration. Our taxation now seems to be more of electronic base. We need more education to make sure that this is fully enhanced and ensure compliance and expand the tax net. The debt restructuring process also has brought in some relief to government, which is one of the areas. The one which is a little bit concerned is the fiscal oversight. Just because of the elections, we've seen that we were not too much disciplined. We spent more than we were supposed to do. However, there are some still implementation challenges. If you look at how the state-owned enterprises have been managed, they have brought in a lot of issues to the whole plan, which means that we may have to look at how these enterprises are governed. So that governance sector is one of the issues. The challenging area, which we are all aware, is the energy sector. Because it's put a lot of debt restraint on government. So these are some of the areas that I think we've improved, and that's areas also that we still have to look at them. When it comes to, I think you made mention of the audit. So the audit is also important indeed, and what this audit, if it is done as the finance minister is advocating for, to have a credible 2024 expenditure audit, is to reassure IMF and then boost investors' confidence, to tell them that yes, Ghana is positioned to be a reformer. So that is why we want to really look at what really went wrong for us to go above the fiscal plan that we had, to identify the inefficiencies that and then also to really confirm whether the bills, the invoices we've received to make payment, whether they are legitimate for us to make payment. And these are some of the issues that needs to be addressed.
Talk to us about what impact a thorough audit of government expenditure in 2024 could have on Ghana's fiscal credibility in relation with the international lenders like the IMF and the World Bank. And given Ghana's economic challenges, what specific structural reform should be the focus of government's discussions?
So, as I've mentioned, so both Ghana and IMF, we know because of the change of government, we wouldn't have known that probably we overspent more than we programmed in the IMF program, plan. This is to give some confidence to IMF that yes, something happened. We are ready to identify the areas and to address them. We really want to confirm that the expenses that have been booked are really legit, and then we have a plan to do a proper optimized allocation of resources to pay for them. Leading to this means that we Ghana as a country, we did not really conform to our own Public Financial Management Act. So one major area that needs the structural reform is how to make sure that the Public Financial Management Act is implemented, and this implementation will be able to achieve them when all new appointed heads for government institutions and SOEs, ministers are aware and they have been trained. This is the structure we are following in our budget execution, and you need to be able to ensure some form of transparency in what we do, especially with a give-mix payment system. The government must make sure that they follow on that structure. Another structural area which needs major attention is the energy sector debt. That is one area that I'm sure within the next 6 months the government must come out with. How are we going to pay for this huge debt hanging on us? If not, once the energy sector is affected, it affects the whole economy and it makes it very difficult.
And what are the potential risks if Ghana fails to make progress on structural reforms?
I mean, so if we fail to make structural reforms, our deficit is going to increase because we will not be so disciplined, and then we will see high inflation happen again. Currency will devalue more. Probably a form of individual profiting from government. So it is very, very essential that the government focus on a proper restructuring and to ensure that the long-term sustainability of Ghana's financial system is achieved. And bottom line is that the Ghanaian will suffer if the structural reform is not done and not done now.
Yeah, I mean, we've been monitoring the IMF's press briefing right now, where the IMF has been talking about the impact of the Trump tariffs on the global economy, saying that the U.S. is going to be worse hit. We've heard from the IMF boss herself talk about the impact on developing economies like Ghana. What policy adjustments should Ghana's government consider to mitigate the effects of the trade war?
So if you notice what is happening now, every country is looking out for its own interest because of this new tariff. In the past, where we've seen huge corporations among countries, countries were focusing on their core competences and then ensuring that you import from other countries to survive. This is changing because of the tariff war. So it requires Ghana to boost local production.
Right.
This is very important, and then also ensure diversified in our exports. Local production boost exports.
Okay. Well, 30 seconds if you can. I mean, the ECOWAS is meeting right now in Accra. I guess this is also a perfect opportunity to talk about the tariffs and then the way forward. What would you advise regional leaders?
So, I mean, the trade barriers they must consider them to see, can we remove some of the tariffs within us and encourage trade? Because now each country is going to look for other markets and not the United States because of what is happening. And this will really encourage, if we're able to trade among ourselves within West Africa and under the AFCFT, it is going to really ensure that once most of us are losing the US market, there are other markets that are opening for us so that we may be able to find a long-lasting financial stability.
All right. Thank you so much, Associate Professor of Finance at the Andrews University in the U.S., where the IMF World Bank spring meetings are underway. Thank you so much, Professor Williams-Pipa. I appreciate your time. You're watching The Marketplace. Up next, your summary of international news.
Yeah, welcome back to the Money Lab. My name is Charles Entry, a senior with the Audit and Assurance Unit here at Deloitte. From our previous episode, we learned about audit readiness, and I believe it was informative and an educative session for you guys. In today's session, we are going to look at how to supplement your income here in Ghana, and I've grouped this into 3 different points. The first one is online tuition. So people can offer their services as online tutors for some institutions such as the ICAG or the ACCA, or regardless of the industry you find yourself in. There are people who are looking to write their professional exams, and once you are versed in those skills, you can offer some of these services. The second one is content creation. I mean, content creation is like the new ish in town now. Depending on whether you want to be a YouTuber, you want to have a blog, or you want to have a podcast, you can explore these opportunities and make money from these avenues.
All right, and that's the marketplace. As we wrap up, one more look, checking with IMF's press briefing happening right now in Washington, D.C. I don't know if we can show you footage of that, but it's happening right now. We keep monitoring that for you. We'll bring you updates subsequently. But essentially, the U.S. is forecast to be hit the hardest among advanced economies because of the uncertainty caused by the tariffs, according to the IMF. Growth is now expected to be 1.8% this year, down from the IMF's estimate of 2.7% for the U.S. in January. So we'll keep our eyes on that for you. Meantime, there is more news on our website, myjoyonline.com/business. My name is Darryl Kwao. Thanks for watching.
So the growth forecast for this year, you're right. We still have the upgrade of 0.5. And this is related to just the positive surprises that we had seen in spite of a very strong fiscal adjustment. The recovery in confidence, I think, has definitely played a role in driving us to have this forecast. That said, there are a number of risks related to tighter financial conditions, commodity prices, and a lot of others, which is true for many, if not most, other countries.
Okay, so now we can move on. I'm going to go, gentleman in the first row.